Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to a very somber summer episode of the AJ Brown Show. This is episode 193. My name is Cyprian Francis, and with me, as always, the master, the wild scientist in his investing cave, working on your behalf, Mr. AJ Brown. Good morning, AJ. How are you doing today?
I'm doing well. Yeah, this week was a perfect example of the summer doldrums. I even got myself back into the gym. I'm on week 3 of back in the gym, and I've made a commitment not to cut my hair until I get to a certain body fat percentage. So get ready for some wild sip.
Goodness gracious, is it a reasonable goal that you're shooting for?
I think so. I'm trying to get, around 18%. Right now, I think I'm at about 23, 24%. So we'll see. Maybe in the next 6 weeks
I
if I
think it's a
try hard.
I think it's a trend because I just picked up running again. Run clubs are a big thing these days, and the 3 mile is like a good mark that I think I can hit consistently. So, yeah, that I guess when the markets hit new highs every day, you got to go outside and try some new activities.
That's right.
Um, where do you want to begin? It looks like we're finally getting a bit of a pullback today after a pretty solid, strong week of anytime we got a pullback, the buyers just kept coming in. The buyers kept coming in.
You
We got
know,
Netflix news
res
yesterday.
yeah, resiliency. Let's talk about Netflix in a second. Resiliency is the key word here. Like, for instance, I'm going to pull up the economic calendar just really quick, Sip, because even though a lot of economic news was released, like the consumer price index was released on Tuesday, producers price index was released on Wednesday, Wednesday we also got industrial production, Thursday we got retail sales. Basically, what this all was saying is that inflation is starting to creep up, especially in foreign purchase goods like staples. People would consider coffee a staple. Well, coffee is going up in price because, well, tariffs, right? The tariffs are starting to trickle in, and this is what Jerome Powell has been talking about. He's like, tariffs are going to trickle in. It's going to increase the prices of things. That's called inflation. And we might need to step in to control it, which of course has not been a message that Donald Trump has liked to hear, because he likes to pretend that tariffs are only a net gain and not a net loss across the board. But the scoop is both in the retail inflation, that's called the consumer price index, and the producers price index, we're seeing the increase in tariffs. But on Thursday, retail sales came in, and man, June retail sales were stronger than expected, which says the consumer is very much, still in play. And then when you look at the market, the market sort of stalled. It's been stalled for the last 2 weeks. You could see here some funky news on Tuesday. Tuesday was when there was this threat that perhaps, you know, Donald Trump would figure out a way to get Jerome Powell out of his job. And so investors don't like that. Investors actually like that there's, a Jerome Powell in the room. And so the market started to go down, and as soon as it started to go down, all of a sudden there was a Truth Social post that said, I don't know what you're talking about, I deny everything. Not a truth. I think he was actually meeting with some representative from Bahrain or something. And you know how when he sits in those rooms with those representatives, he tends to go on rants that have nothing to do with the meeting at hand, and he starts chit-chatting and talking, and he's like, and I don't know why and people think I'm going to fire Jerome Powell. I'm not going to do that. And as soon as he did that, the investors started to buy again. So, I don't know what's going on with that respect, but the market's been slowly going up, but for the most part, it's been flat. Like if I take my little linear regression line tool here on my chart and I start from here and you look, there's a little bit of a move up, but in reality, if I pull up my analog version of my confirmation of a top indicator, well, let's see what it says. I mean, it's skating with a possible crossing telling us that a top has been found. It hasn't yet crossed that magenta line, but it looks like, it's just a matter of time. So that's kind of where we stand. I think, most people are like, I don't know whether I should be buying or selling. Maybe I should pay attention to earnings since we're in earnings season. But it's kind of a summer doldrum week.
Yeah, and that was a topic we've had a couple of the shows is the FOMO, right? Like crypto, I don't know if you've been following crypto, but crypto is more on a like a straight rocket ship up when we compare it to the S&P. And so some of these we would consider traditionally risky assets are seeing some of the movement. And the question that continues to arise is, can we still get in? Right? Have we missed the boat? Can we jump back into the boat? But I think what's good for everyone to know is with options, it's not directional, right? We don't necessarily need the market to go up or down to make money. So what are your thoughts on seeing a market that just is just sitting here at these tops day after day, week after week? I mean, looking at your chart, it's almost 3 months of this just kind of sitting up there.
Mhm.
What's the best way to handle something like
I
that?
mean, this is all about wait and see, right? I'm shutting off some of my indicators. These, by the way, are some free indicators that people can download from our website. I'm sure we'll talk about that later. Let me throw in some of my overlays here. So, you know, we've had, I guess I should update this one yellow line. This yellow line marks a movement in progress, right? And we always track the highest close, and the highest close so far was yesterday. But as you can see, this current trend, and it's definitely an uptrend, has had some really nice up moves, right? When we overlay our rulers, you can see, and again, I got to just update this with yesterday's close. There we go. When you can see this, you see that each time we have a move up, we get into this green zone, which is for an ideal zone to get into when you're moving up. Where I've got some hesitation, Sip, is these pullbacks. Right here, you've got a couple of pullbacks, and they don't seem to pull back enough. And you might say, wait a second, if you're talking about an uptrend, why do we want to see pullbacks? Well, it's a way to rebalance and get your buyers to actually be ready. They have to sell a little bit in order to have money to start buying again. And so I worry that we haven't been able to kind of pull back enough to give the buyers capital. And so the last 2 weeks of stall have actually been telling me that, hey, it's more than just the summer doldrums. This rally has always been kind of under pressure. We may actually, now that we're at some, new highs for the S&P, we may actually be topping out.
And during the week while we are getting these news events, right? Like you mentioned, the article or like whatever was leaked out of the White House about firing the Fed. The one thing that I heard multiple times was that would not be good for the market if President Trump fired the Fed chair. Everyone was saying like another 10% pullback would be on the table. Would you see a reaction like that
Mhm.
from the markets?
I Here's what I'm hearing. This is strictly what I'm hearing talking to my friends that are fund managers, right? Mutual fund, pension fund, hedge funds. The majority of money in the market is still fund managers, right? There's a little bit of a no confidence vote building, right? Because a lot of the talk that was talked about in the first 100 days hasn't really materialized, right? The tariff deadlines keep getting pushed off, right? Now it's August 1st. The um, trade deals, not one of them has actually been inked and solidified yet. There's been a lot of talk, supposedly headlines that trade deals are coming around the corner, but none of them have been solidified, right? And none of this kind of progress that was supposed to be in place has happened. So, like, Trump's talking more about tariffs and, I'm going to put these tariffs on August 1st if they don't come to the table. And investors are like, yeah, we've heard this tune before, Taco Man. And so they're like, not really believing a lot of this stuff. And if, when you have this much of no confidence building for this person who's driving the ship, and he then you know ousts one of the guys who's keeping the ship from tipping over, that would be a big problem. As option traders, we could totally, trade that, because again, we can make money whether the market goes up, down, or sideways, whether time passes by, and even on um, you know, fear and confidence. But yeah, it wouldn't be a good thing for the markets overall.
And that's crazy because when we look at the 6 months of the market, the biggest drop has been self-inflicted, and the scenario would also be self-inflicted. And so we would just kind of continue to creep up. The White House does what it wants to do, and then we got to react. And it's almost not a real representation of what's going on in the market. But it's good that we're starting to get some earnings that are coming out. I think like Pepsi came out and just crushed it. And
Yeah.
that's like a good example of the consumer potentially weathering the storm, right? With some of the retail sales. And I guess it validates the market kind of just sitting up here like, hey, we're just gonna wait. We're just gonna creep up a little bit. Has I guess last week we got into some earnings. We're gonna go over some earning plays today.
Sure.
Are you getting any sentiment from that side of things? Like
Well, the first
guidances
week
and
of
stuff?
yeah, the first week of earnings is typically banks. And like Citigroup, we did a trade on Bank of America. The scoop is the banks were unimpressive with their earnings, nothing special. But you're right, the actual consumer retails, cyclicals and non-cyclicals have actually ticked up a little bit. So, the consumers out there, but are they borrowing big amounts of money? Are they doing big transactions? I don't think so. I think just like we're seeing the investors kind of, you know, in a holding pattern, in a wait and see pattern, I think consumers are definitely going out. They're like, what am I going to do? Well, I'll go out to the restaurant. I'll have myself a Coca-Cola, a Pepsi, but I don't think they're out there doing really big, purchases. They're just living their lives. But I think everybody's a little bit more trepidatious than they were, at the start of the year.
And I guess the argument for why we should fire, or at least the argument that President Trump is making on why we should fire the Fed, is because he doesn't want to lower rates. And his stance is, well, we don't know what's going to happen with these tariffs. However,
Mhm.
the data starting to show potentially that the tariff effects are not as negative as maybe the Fed had hoped, and maybe there's a case to lower rates sooner. But the president is fairly, opinionated about what he wants, and he wants lower rates for a number of reasons. Do you think we're close to having a good reason to cut?
Well, With the consumer price index and the producer price index report that came out this week, overall, they came in as expected. So when you look at the top end numbers, which is why I'm not even pulling them up because I usually on my screens for Friday only have the top end numbers, it looks like everything's as expected. But when you drill down and you look at the sectors, right, you realize that tariffs are having an effect, right? There's those things that we rely on from other countries are up in price big time. And so because of that, the 10-year treasury bond, you know, people have started to, pulling out of that. So that means that the rates are going higher. And in addition, um, they don't think that the Fed, because of these increases that we're just starting to see trickle in and month out, they don't think that the Fed is going to lower rates even in September. The chance that the Fed lowers rates in September has dropped even since last week. So it's actually the opposite, Sip. It's like as of this week, we definitely aren't going to get a rate drop in July, but the chances, it's still over 50%. But this number over here, where there's no rate cut in September, has been creeping up, and this number has been creeping down, meaning we might not even get a rate cut in September.
Yeah, and I had to go to ChatGPT while we were having this conversation and ask, has the US government ever fired a Fed chair? The answer is no. And then when I scroll to the bottom, in short, no US president or administration has ever fired a Federal Reserve chair, and doing so would likely be unprecedented and controversial. So, even just saying it should have some ramifications, but it's similar to the taco trade where it's like, all right, well, dude, are you gonna do it or not, dude? Like,
Yeah. Well, and I think that there'd have to you can't the president can't fire a Fed chief, but he could put pressure on the Fed chief, or he can already, usually a president doesn't nominate a new Fed chief until closer to the current Fed chief's retirement, because what that does is it creates kind of a lame duck situation. If you already know that a new guy is there and he's already like getting ready to take over the job, the existing guy loses credibility, right? So there's a whole bunch of different things that Trump could do. I hope he doesn't do it for the sake of the economy. But again, for the sake of my personal portfolio, thanks to, being quite versed in options, I'm not actually worried.
yeah, and that seems like that would be the political play to do it, like you mentioned, where he like, I don't know when his term expires, but maybe at the end of
April
the
of next year.
yeah, so he could front run it by like 6 months with somebody who's very out in the media, right? That media person could, really be almost like speaking the policy without actually
Mhm.
changing it. And, we as investors, we got to like uh, accept what's happening and try and react from it. But very interesting situation this week. Like we haven't had something like that in a while where the president's like, yeah, or and those reports look pretty legit. I don't know if you were getting the tweets, but they were talking about like congressperson this and that, and for them to be leaking it was very interesting. And fortunately for us, it didn't happen. I did see you pull up the VIX, and
Mhm.
I'm not sure, well, I know why, but we're so confident. That would be my takeaway from looking at the chart. It's just
Well, and we talked about 3 weeks ago about our VIX hedging trade, right? And we like to get into the VIX hedging trade when we're at a low. Well, we're at a low, but very much like the S&P 500, we're kind of also at a wait and see with the VIX. Now, I like to pay attention to the VIX in these situations because oftentimes with your stock holdings, with your portfolio holdings, if you're asked to be in a wait and see for too long, people start hedging with VIX trades. So I'm watching this carefully to see if, people start buying insurance because they've been, asked to sit for too long. They start to get antsy and they start to get anxious. And so they start to buy insurance, right? Because that's what we do when we get anxious about an upcoming event. That hasn't happened yet. Every time I think I've got a signal that says put on your VIX hedging trade, it never gives me the follow through. And then you can already see yesterday, the signal went away again. That's what these red and green arrows mean. So I'm waiting for the next green arrow. So 3 weeks ago, we were saying VIX trade, get ready to put it on. And I'm still saying that, but we haven't gotten the signal to put it on. Everybody's just in a stall. And I think in part it's the summer doldrums, but I also think in part it's kind of like the headline chasing, and the headlines have kind of lost some of their muster, you know?
Yeah, I definitely feel the summer doldrums from a
Yeah.
variety of perspectives, which in my mind is shaping up to be a pretty exciting September. Like I could see just September being,
Yeah.
full of movement, full of people getting back in. Maybe even the late August when we start to get back to school kind of stuff rolling again.
Yeah.
I know kids these days are starting school super early. All right, so the VIX is still on hold until you get your trigger.
Yep.
The link to getting that tool is in the chat for anybody that's joining us for the first time. Head on over there. This is one of AJ's wonderful free indicators. I don't think we don't have a nifty name for it. It's just your fast MACD, right?
That's kind of
Yeah.
nifty. You're a nerd.
The speedy MACD. All right, so before we take a break and go into some reviewing some of the positions from last week, I did have a tweet that caught my attention today, and I'd love your feedback on it. This gentleman, Mr. Charlie Biello, is always posting really cool facts. This one was basically, his headline was why you need to invest in one chart, with the returns on the S&P being the blue and the value of the US dollar being the red. And I keep, the dollar isn't something the consumer pays attention to so much, but I'm continuing to hear that the dollar is getting beat up pretty hard. This chart kind of brought that to my attention. What are your thoughts when you see this? Is this kind of, a data set that is a little extraordinary?
This is actually not changing over time. But what's also interesting is and he didn't pull this up, but if you show the value of the dollar compared to other currencies, because that's one of Trump's biggest arguments, is that, with interest rates where they are, the dollar is still more expensive than other currencies. So every country has been devaluating their currency kind of even at a faster rate than the US. So even though this graph shows that the US dollar, it has lost its value, um, all currencies have, even worse. And so what Trump is saying is our stuff that we sell, because our dollar is so strong, is too expensive for other countries to buy. So, Jerome, lower the interest rate, lower the value of the dollar. Let's get it so that our stuff that we sell, our widgets, are competitive. Now, whether or not we actually manufacture widgets that could sell is a whole nother topic, but that's one of the arguments behind lowering interest rates. But you know, I see that picture and I see the S&P, or is that, yeah, that's the S&P 500. And I see that it's, at a higher slope than the way that the dollar's losing value. And I would agree with that. The market accelerates faster than the dollar. And that's why you got to be, I don't think you can be, for all of those listeners out there, I don't think you can be a passive investor anymore and build wealth. you do have to learn about this stuff. And I think it's just a crime that they don't teach this stuff in school. And it's one of the reasons why I created Trading Trainer almost 25 years ago, is because, they don't teach this stuff in school, but you need to know how to be an active investor these days if you want to build wealth.
Yeah, just putting earning money, saving money is great, but when the money devalues itself over time, you need to be putting that money to work. And that's the beautiful thing about, like you mentioned, the program that you created, educating different levels, different ages. I mean, we had, I don't, Manuel, I forget what our young
Yeah,
viewers
Manny.
are, he's 14, 15, maybe older, I don't know, but he's been educating himself. And once again, if you want to get involved, learn more about AJ's approaches, some of these tools, we've got a quick links page. I've gone ahead and added this into the chat, but this has got all the good stuff, our socials, the free indicator suite. This workshop is, if you like the idea of putting some of the money to work and not just having it sit on the sidelines, this free workshop right here is a great resource for you to get the ball rolling. We've got the weekly mastermind of not all the participants, but a lot of the participants in your community getting together, chatting about ideas. We've got some information on that, and one-on-one coaching. So like AJ said, you got to know what to do. You got to be doing something, or you almost are losing money with just having it sit on the sidelines. And options are a great tool to limit your risk, to maximize your profit, to be able to go to sleep at night, wake up and not, have to stress. I know that that's something that a lot of newer traders struggle with, is the emotion. And I think your program and strategies really do a good job of removing that emotion and sticking to the plan. So links to that are in the chat. As usual, we are streaming live. It is a summer doldrum. So if there's any names, questions that you guys want AJ to give you some input on, feel free to throw it in the chat. We're going to take a little break here. We'll be back and we'll talk about some of the volatility plays from earnings, some names we looked at last week, AJ's pick of the week, and our speed round. So sit tight, folks. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
It's funny, right. In that commercial, I had some Ray-Bans on, and now, thanks to your recommendation, I bought some of those Meta Ray-Bans, and they're kind of fun, man. You can you just ask it. You're like, hey, Meta, what am I looking at right now? And it'll like describe everything. And then you're like, hey, tell me a little bit more about this, or hey, Meta, where am I right now? And it'll just talk you through anything. If something comes up in a conversation and you want to fact check it, I'm like, hey, Meta, is that true? And
yeah, that's still the hardest part, because you can't like mentally ask it and respond. You have to like repeat it and add the word meta in there.
Yeah.
I would be wearing them, but they were dead this morning because I wore them out all last night at a little tech event, and there was only one other person wearing them, and everybody kept asking me questions about them. But the funny thing about what you mentioned that's kind of creepy that I experienced was the, hey, Meta, tell me more about this, right?
Yeah.
So I was hanging out with some lady friends, and I was like, ooh, Meta, who are these fine ladies? And in response, Meta was like, please take a picture. And I was like, oh, that's kind of creepy, actually, that you're going to go search everything that I'm looking at. But at the same time, to me, it's like, this is the next 5, 10, 20 years, like wearables and the integration of we as humans and the technology in real time. But like you said, for everyday stuff, where you wanted just to help her. And have you been recording? Have you made some videos,
No,
pictures?
I don't. I know that that's easy, but I haven't even. My brain doesn't wrap around that yet. But I've got to get into it. Be like, hey, Meta, turn on your camera now,
What
and
would be cool is with some of your trapeze stuff, you put them on, you hit the go. Like that would be a really cool perspective.
that would be cool.
Let's put that one on the list.
Okay.
All right. Okay. So from this week or from last week, let's go into BBWI because
Gosh,
that's been
this
a name
is
we've been looking at for like 4 weeks now.
textbook. This is like one of those premium trades. So you can see, let me switch gears here with the, I'm going to switch from the one indicator into the other indicator here. There we go. So you can see we got that light blue arrow and we went ahead and got into BBWI. I personally got into it with a back month option. That means instead of buying the stock, I went ahead and bought a call option that doesn't expire until next March of 2026. And it was deep in the money. So it basically acts like the stock, but it's much less expensive, so you can get some leverage in there. And then we were waiting and we were waiting for that signal to tell us to sell premium and buy protection. Well, you can see that signal clear as day right here, and it came with the next day follow through. So we sold our premium, bought our protection, and now you just sit pretty and you let the position make money. The premium that you sold, so you got some money up front, we're looking to have it expire worthless. And the protection that we bought as we move down back to, our buy point, that protection is going to increase in value. And then once we get that bottom reversal and we start heading back up like we've done a few more times in the past, we sell that protection at a profit. And we've got two sources of profit, two sources of trade and portfolio gains that just happen over time. This position is now hands off. I don't have to do anything. I don't have to worry. It's going to be self-adjusting should something happen with Bed Bath and Body Works over the next few weeks. So all I got to do is nothing. I just let time pass by, and that's how this position makes money.
Yeah, it looks like earnings are coming mid to late August 13th. So maybe that might time itself out great to close out the position and find something else. But we've been liking BBWI for quite some time, and like you said, example of now you let it do its thing, and you don't even look at it, and enjoy the results.
Because of such perfect legging in that we were able to do with our signals, I'm looking at a 1 month gain of over 20%.
Wonderful. We can't even get 20% in the S&P in 1 year.
And it's a 20% gain that I'm not actually actively trading. It's gone into passive mode. I didn't have to do anything. I put the one trade on back in June 17th. I put the next trade on July 14th, and now it's in passive mode, and I'm clocking in over, 20% gains just per month. So, it's not like I'm actively having to trade this thing. It's just making money while I sleep.
And that's the beauty of it. On the alternative side, with these earnings, the time frame to get in and out is even much shorter. And I believe last week we were looking at Bank of America. We touched on the financial earnings coming out. How did BAC end up working out? What's the status on this here?
It was a complete implied volatility crush trade, right? You can see that, the earnings were in the morning of Wednesday. Not much happened, as you can see here. Let me zoom in on these price bars for you. So this was a earnings day. This was the night before. The night before we put our calendar spread in place. Not very much price action on the next day. And so we were able to just make this a complete volatility crush trade. Again, this one trade, it's not considered a day trade because we placed the trade the night before, basically around 2:30 in the afternoon, and 2:30 in the afternoon, New York City time. And then we got out in the morning around 10 a.m. So it's considered, a day trade is one where you enter and exit in the same day. This is not considered a day trade. For those of you that have trading accounts, that brokers, if you get grouped in as a day trader, you have higher bars to meet. This is not a day trade. It's important to emphasize that. But for the most part, it did exactly like we did. And let me just explain, a calendar spread. This is kind of how it works. So here's how a calendar spread works. You buy a option that's like maybe 3 to 6 months out. And let me turn it off so that my marker doesn't fade here. Okay. You buy an option that's 3 to 6 months out, and that option isn't going to change much in price because of volatility changes, because it's far out. The options that people buy and sell for hedging for, earnings are usually the options that are, if not that monthly option, it's an option that's maybe 1 or 2 weeks out. They'll use the weekly option, and that they buy that insurance leading up to earnings, just in case something happens and their stock goes against them. Their option it will bail them out. So what happens is you go ahead and you buy that back month option and you sell one of those front month options. It's the same exact strike price, and like I said, investors are looking to protect themselves. So when you sell that, you kind of get top dollar. So when you buy and sell that, what you wind up spending is just this difference, right? So that's how much your calendar spread costs. You buy this, you sell this back immediately, and this is all your out of pocket, is just this amount here. Now, after the earnings happens, those folks that bought those protective options, especially if nothing happened to price, they want to get rid of those protective options and get their money back, right? They don't need the insurance anymore. It turned out that earnings didn't change the stock price very much, so they don't need to hold on to that options anymore. The back month option hardly changes price at all. It stays the same. But the front month option, because everybody's now getting rid of it, goes down in price, and that's called the volatility crush. And so when you go now to undo your trade and sell your trade, what you wind up doing is now getting this amount when you sell that calendar spread. So you can see the difference and how easily, that small number that you paid to get into the calendar spread now grows, just because the demand for that front month option drops, the price drops, the volatility crushes. That's how we do these trades. And so this number on Bank of America, totally increased by about 24% on my trade just overnight, taking advantage of that front month volatility drop.
I gotta admit, AJ, that diagram has got to be one of the best representations of explaining that I've seen, and that was very helpful. So let's see if we could apply that knowledge to a similar name that you're looking at this week, which I believe is also an earnings play in the financial sector. And this is a name that you like this week, your pick of the week. This is Key Bank, ticker symbol KEY. Let's walk us through the same logic that you just explained.
Well, let me tell you. So Key Bank is actually one of my symbols that is in my long-term portfolio for selling premium. So, I look at Key Bank often, and there's a lot of times I can get into Key Bank for a premium trade, but that's not what's happening right now. And also, just to give you some, Citibank, Bank of America, Capital One, even Wells Fargo, these are those big banks that are too big to fail. KeyBank is one of those mid-sized banks, right? I think it's based out of New York, but you'll see key banks around. They've gone ahead, but they're not as popular as some of those other ones. The pattern that I'm seeing here, Sip, this pattern is definitely one of a potential swing trade. And we're looking at swing trades a lot right now. So you come back here, I find my lowest close, which was right here. And, this thing's trending up. It has pullbacks. So I definitely, in the next 2 or 3 weeks, want to look to see if this pulls back enough to catch the swing. Okay, so that's, trade number 2. But trade number 1, you're absolutely right. Coming around the corner is, wait for it. I got to make sure I have the right, I got to pick my little arrow tool. There we go. There it is. Before market open on July 22, they're going to release earnings. Now, KeyBank has been very similar to the bigger banks in that earnings don't really affect the stock price. It doesn't matter whether it affects the stock price or not. The owners of the stock will want to hedge their positions the night before. So the trading day before, this will be on July 21st, we want to go ahead and buy our calendar spread. Again, buying a calendar spread, what it winds up translating to is buying that back month option that's stable in price, selling the front month option, which is going to be, up in price because people are buying it. And so you're going to wind up spending this amount. And then the next day after earnings is released, we expect that front month option will drop in price. So when we go to sell that calendar spread, it will have grown, right? The combination of the back month and the front month option together. So July 21st, put on the calendar spread. July 22nd, take it back off. And then we're going to watch for a swing trade. We're going to watch for pullback. Maybe we'll use something like the Williams %R and see that it wants to pull back to, a negative 90. And that'll tell us that we've got enough pullback that swing is queued up. And we'll look for some sort of lagging indicator to tell us get into that. So it's a 1-2 punch. I'm doing that with Bank of America too. I'm waiting for that swing trade to materialize.
Yeah, and KeyBank at $18.40, about
totally affordable.
Half the cost of that Bank of America trade. So yeah, we've got bank earnings this week, bank earning plays. So next week, let's see what transpires. We didn't touch on Netflix, but I know Netflix was a big one in the news yesterday. Man, I can't believe how much money Netflix makes. Literally everyone has an account now.
Mm-hmm.
And
I mean, Netflix cracked down, didn't they?
They did, and they continue to produce good quality content, and so it's almost like the movie business is dead and Netflix business is on the rise, and they're starting to do more sporting event and stuff. But there's not a trade here. I just thought it was, it was in the news. Everybody was waiting for the Netflix earnings. It seemed to have not really do anything, but it is up a little bit from yesterday, it looks like.
Well, and
all right.
For those of you who are interested in Netflix, again, if you take a look at this lowest close, which was right here on April 4th, and you draw yourself a best fit trend line, right? Let me just show you, Sip. It's really, really easy. And I'm not going to go into all the deets because, that would be a little bit longer. But I'm going to throw this Williams %R on. And folks, pay attention here. When you set up your Williams %R, a lot of the charting software folks with their indicators, they're going to a default of 10. And I went back through all my notes. I used to catch up with Larry at a lot of these trading events, Larry Williams, right, of the Williams %R. The number is 14, right? That's the majority of users who are using the Williams %R. They have the length set to 14. And then we have these two settings here, and I kind of increase them both. So the one was at -20, I drop it to -10. The other was at -80, I drop it to -90. And so this little guy here, this is a very powerful indicator, and I want to make sure you set it up correctly. So it's 14, -10, -90. When this thing pulls back below a -90 and you've got that uptrend going, that's your signal that a swing trade is queued up. Now you just wait for some sort of lagging indicator to tell you that a bottom has been found, and that swing has the highest probability to produce money. You could trade just the stock, or you could leverage an option and you'd be really well. And Netflix, as you can see right here, has queued up beautifully for a swing trade. So we're right here. We're currently right below my threshold. We're at -90.11. So we're 0.11 through my threshold. So now I'm just going to wait for a signal. You could use a lagging signal as simple as, a close above the 7-day simple moving average. That's one I've commonly used to tell you that it's time to trade, right? And then you trade, and when that signal reverses, that's when you go ahead and liquidate the position. Swing trading is in right now.
Yeah, another interesting tweet that I came across for Netflix is $10,000 invested in Netflix at the IPO in 2002 is $10 million now. I was like, that is quite a return and a great sign of capitalism and the American engine that can, right? You build something, you get investors, you build it over 23 years, and now it's this behemoth that we all love. But that was, I don't know if you're a big IPO guy, but I don't know.
I know some folks, some very good friends of mine, not really into the markets, in Northern California, that totally tried to, in 2002, they tried to get me to purchase. And I think I need to check in with them because I know they purchased some of Netflix. And I was thinking, I don't want to mail my CDs and DVDs back and forth with this company. They're never going to go anywhere. And then, the big change to streaming versus DVDs, and they've only made the right decisions. And so, yeah, I get it. But who knew? I know I didn't know. My friends knew, but they were playing a hunch.
Hey,
Good hunch.
those stories will continue to repeat themselves, especially in this new age of AI and development and things like
It's like
that.
my wife and her Nvidia holding from 10 years, more than 10 years ago.
That's another one of those that gets, brought up as like a great example of, like incredible returns over time. Not almost 2 decades, 20 years for 10,000% return. Like, those are Bitcoin type numbers.
Yeah.
Okay, wonderful. All right, so that's your pick of the week. We'll just a little touch on Netflix. We've got a couple names from the lovely folks from around the world. So AJ, we got about 10 minutes or so to run through this speed round. Let's go ahead and get the party rolling. Bill out of Durango, Colorado is interested in Coca-Cola, ticker symbol KO, which I would assume was riding those Pepsi coattails. I mean, that's what I would assume. What are your thoughts on Coca-Cola here?
Well, I do know. Did you read the tweets from Donald Trump about getting Coca-Cola to change their recipe here in the United States? The recipe here in the United States is corn syrup, and in Mexico you buy Coca-Cola with cane sugar. And I think, I read the tweet or Truth Social post where he's like all excited that he got Coca-Cola to agree to put cane sugar back into the Coca-Cola here. So didn't really affect the stock price, though. I'm looking at the stock price, Bill. Here's what I think you should do with Coca-Cola. I'm looking back at some of the previous earnings. Well, this one was a little bit exciting. Let's look back actually a whole year. This one didn't really move much. And the one from exactly a year ago day to day really didn't move much. I think you should think about an earnings play because look, Coca-Cola is getting set to report earnings when? Also July 22nd, and it's before market open. So July 21st, come in the afternoon session, look at where Coca-Cola is trading and do a calendar spread at that, strike price. So if I take a look at some of the options here, you've got, it doesn't look like, let me see right here. I'm going to get rid of my filter. Okay, so Coca-Cola's got some weekly options. You can go for your front month with either the July 25 or the August 1. For your back month, like I said, go 3 to 6 months out. So maybe your November option. And then just pick the strike price close to where you're trading, unless you have a bias. If you have a bias, pick the strike price in the direction. Whether you use calls or puts, there's not much significance there because you're actually canceling out the intrinsic value. I know I'm hitting you with some word salad. Pick some strike prices and just place the trade the night before, and then the day after, look for when the stock is very close to that strike price that you picked and liquidate it and take advantage of the volatility crush. That's what I would do with your Coca-Cola trade.
Yeah, and this is definitely an example of a blue chip sitting in the Dow Jones Industrial Average and the S&P 500, quite a staple of the U.S. economy. So thank you, Bill. Thank you, AJ, for that input. Moving on to our second name. Kevin out of Richmond, Virginia wants to know what's going on with cigarettes. Philip Morris, ticker symbol PM. Are the folks smoking less these days?
Well, so they're definitely, Philip Morris is going up in price. Look, they were 6 months ago, they were trading at 130. They're up at 180. So, the export on cigarettes has always been quite high. We don't smoke here, but, I don't know if you've been to Europe recently, but they are smoking like there's no tomorrow. I'm just looking to see if there's an earnings play. There could be. Philip Morris does tend, investors do tend to react to earnings. A year ago, they didn't. But then, 3/4 of a year ago, they did. Half a year ago, they did. A quarter ago, they did. So, and I'm seeing a little bit of a consolidation pattern. So I almost feel like let's not do the volatility crush play. Let's do this earnings season with a straddle or strangle. I almost, I see this consolidation and I feel like there's going to be some price action. So I would put on this trade sooner than later. Let's see. Oh, another July 22nd earnings. I would try to get this trade on today. I would try to put together probably I see that I'm trading close to $180. I would do a 180 straddle, right? A straddle is where you buy a call and a put with the same strike price. And I actually would probably go out about 1 to 2 months and maybe even more. More would be expensive, but I'm expecting a little bit of price action change. And so the straddle or strangle will profit me whether or not it pops up or if it pops down. I think that's the way that I want to go with Philip Morris. Yeah, we're not going to do the calendar spread here. We're going to do a straddle instead and maybe go out maybe 2 or 3 months.
Awesome. Hopefully that's giving you some good ideas, Kevin. Moving on from one staple to another, from PM to GM. I don't know if you saw the news yesterday with the Lucid Motors, where Uber made a huge investment in their potential autonomous driving program. Lucid was up like 37%. I imagine there was some sort of spillover in GM. But Richard out of Columbus, Ohio, brought this one up. Wants to know, what can we do here?
Well, so you can see my best fit linear regression line. GM has definitely been on a little bit of an uptrend despite, these pullbacks. By the way, take a look right here. So, we've got this uptrend. And then remember I showed you that Williams %R and told you how to set it up. So here's your trigger. And then here's your signal with the follow through. It gave a little bit of an agita, but never went to our break even. And then ultimately shot up till we got our exit. So there's something to be said, buy at 50, leave at 54. If you use an option strategy, instead of making 8%, which is what this stock trade would have made, you'd probably make more like 25%. My first thought is let's wait for the Williams %R to again queue up. Let's wait for our lagging indicator and let's trade the swing trade. It's already given you one swing trade. I think that you can get another one out of it. But the other thing is earnings. So we're always, this is the season for earnings. So if I take a look here, another July, lots happening on July 22nd. What is that? Tuesday? Let's see, 18, 19, 20, 20. Yeah, that's going to be Tuesday. So let's see. GM, hardly any change last month. Okay. GM, are they after or before? They are before. A little bit of change half a year ago. Let me look one more place. I like to look at about a year. Sometimes I look at 2 years. A little bit of change here. Well, okay. So GM is a little bit on the volatile side when it comes to earnings. If you have a bias, and I haven't been following GM a lot recently, but it looks like their bias is probably on the positive side, but you never know. But if you've got a bias, if you've been following GM and you have a suspicion of what earnings will do, then do your calendar spread at that, on the side of picking strike prices with your bias. So if you're bullish biased, pick like the $55 strike price or even higher. If you're bearish, pick the lower strike price and do your calendar spread, because then you get a combination of the volatility crush and you get a combination of that directional move on bias. If you don't have a bias, that straddle or strangle. Let me see if they have a 52.50 option. Let's go out to, I see it's either September or December. Let's look at September. Oh, they're trading every dollar. No, I lie. They go to every $2.50. So maybe we're thinking a 52.50 straddle. If it goes up a little bit higher ahead of Tuesday, I could see doing a strangle. That's where you buy the 52.50 put and the 55 call. So couple of different strategies to win on earnings, but I think the even bigger play here is to trade the swing trade when it queues up.
That's going to be a common theme. What?
I think so.
Through mid-August or so?
I think the whole swing trading thing will break for us when we find a top and actually pull back. When we not just find a top, but actually find a trend reversal top. As soon as we find a trend reversal top, I think that our theme of looking for swing trades will be done. But right now, swing trades are a good thing to have in your back pocket.
All right. General Motors in general swing trades. Thanks for that, Richard. AJ, summer doldrum Fridays. The markets are, S&P is pretty much flat. NASDAQ flat. Dow's down a little bit. Looks like we're going to be heading into the weekend on a quiet note. What should we and the viewers be thinking of heading into next week? What's the mindset? What do you think we should have queued up?
Earnings. Go to your earnings calendar. NASDAQ has a free earnings calendar. Look at, what's going on. Go back like I did on today's show. Look at like the last 4, if not 8 earnings. See how investors have historically treated earnings for that particular stock. See if there's a calendar spread. If you've got a couple of symbols that you're very familiar with and you have a bias of them going into earnings, do that calendar spread with the bias. And then the other thing I can tell you to do is, queue up these swing trades. I'm telling all my full-time traders, go through your watch list, look for any symbol like this GM or my key bank. Any of those ones that have a trend to them are queued up for swing trading. Just wait for the signals. Check in with them every evening. Earnings and swing trading. That's what I've got on my plate for this weekend.
Yeah, it kind of makes options a little bit more exciting than usual when, everyone always thinks as options as being very boring, but with these volatility rush and crush plays, I mean, that's pretty exciting stuff if you're looking for a little bit of excitement. If not, if you're looking for some of these more passive concepts, etc., some of AJ's proven strategies over time, learning about premium selling in general, we've got this awesome quick links page. The link to that is in the chat. You'll find access to all of our socials. You'll get access to AJ's free indicator, some of the other freebies, learning more about the Trading Trainer as a program, access to the workshop, coaching, a bunch of good stuff. Head on over there. And as always, if you guys have any questions, comments, feel free to throw it in the chat. Send us a DM. Someone will get back to you. Head on over to the website, tradingtrainer.com. I know the team is working on a lot of cool stuff on the back end. So sign up so we can, stay in touch and give you some access to all that stuff. Otherwise, enjoy summer, right? It's like we're having some beautiful weather all around the country. So, enjoy it. Stay safe. And let's come back next week and crush it with some of those earnings plays. AJ, thank you for your time today.
Yep.
And thank you everyone for tuning in. We appreciate it. That's all I got from my end.
Same here. Take care, everyone. Have a good summer.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.